Good morning, it's Steve O'Hare from Signal Centre. Welcome to another edition of Talking Bull. It is March the 11th, Friday, March the 11th, and we're going to dive into the headlines, cover off the technical areas of the market that we've seen extend over the last 24 hours, and drill down into a little bit of fun at the end with the gun to head challenge. So let's start off with the news headlines overnight. Economic pressures dominate during Thursday's market session. Markets are continuing to monitor Ukraine developments very closely, with particular unease over US and UK warnings that Russia could use false flag warnings of Ukraine development of biological warfare programs as a pretext to use chemical weapons. On Thursday, the wider economic implications had a larger impact on financial markets, with increased concerns over the outlook for inflation, especially with sustained upward pressure on food and energy prices. Overall confidence in the global economic outlook deteriorated. US inflation posts a fresh 40-year high. US consumer prices increased by 0.8% in February. Underlying prices increased 0.5 in the month, with the annual rate also meeting expectations at 6.4%, or exceeding expectations at 6.4% from 6%. Bond yields also moved higher yesterday during markets were extremely uneasy over the global inflation outlook, which undermined support for fixed income. ECB looking to end bond purchases in October. The ECB held interest rates at 0 as expected, following the latest council meeting. As planned, the central bank will end emergency bond purchases this month, but there was a change in the planned APP purchases, with a faster taper for the second quarter. Third quarter purchases will depend on market conditions. The dollar yen hits a 5-year high, getting up to 116.75. We'll have a look at that on the technical side of things. And there was some pre-weekend position adjustment expected. This is likely to be significant, with reservations over a potential escalation in the Ukraine conflict when markets are actually closed. So let's take a look at the markets, dive into the technical outlook. First of all, we'll start with the commodity gold. Obviously, gold is a safe haven. We've seen gold move to close to the all-time highs. We got up to 2070 this week, just short of the 2075 all-time high, and we've reversed very sharply from there, with a little bit of hope of the conflict easing. That doesn't seem to be materializing, so there is still potential for further upside. However, looking at the 4-hour chart, there is a potential for this head and shoulder formation to play out. We really need to close below the neckline. That comes in at 1970. However, over the last 4 hours, we're seeing prices move higher, back up to 1993. The $2,000 level will act as resistance, and 2010 above that, that's where the top of the right shoulder is currently. So really levels to watch there on the downside, 1970. Over the 4-hour chart, the oil prices have moved aggressively lower. We've got down to $100. That was on Thursday's price action. Wednesday's afternoon, it was like almost a mini collapse. Prices have stabilized, but then moved lower again late yesterday, although recovering overnight. So potentially setting up a bit of a bearish flag formation. That's definitely one to watch, although we still have the Ukraine-Russia conflict overhanging, which may hold off on this this sell-off. Really, breaking $100 would be quite significant in the WTI crude oil. That is where we got down to. That is obviously a previous high before, which acted as resistance, is now acting as support. So a break of $100 is key for crude oil, and staying above there maintains this bullish sentiment. Quick look at Bitcoin. Yeah, we had again the rally up Wednesday, collapse down Thursday, and again we're getting this rejection of the moves higher. Support really coming in around about the 37,200 level. We're trading mid-range, and we can see there's lots of movement we've seen around about this 39 to 40,000 level. That really sort of acts as a magnet almost. Currently we're trading just under there, so a little bit of a bias to the downside. The daily chart yesterday posted a pretty bearish candle, wiping out the previous day's gains, and overnight we moved lower than Wednesday's price action, so looked pretty negative, although we recovered from them lows at 38,260, trading just above there. So still a little bit of bearish sentiment mixed in with the cryptos. The indices seem to be doing okay, although they stalled a little bit yesterday. Overnight, we seem to have stopped the rot, and we're pushing high in FTSE, 7,150. Obviously, FTSE has the commodity component, so oil coming off, maybe that assisted in the FTSE giving up some of those gains. Although we saw the other indices in Europe, particularly DAX, trading around 13,500 now, saw that give up Wednesday's gains as well, half of them anyway. So a little bit of a 50% to 60% pullback, quite Fibonacci-like. The Dow didn't give up as much. We did have a sell-off in the Dow, but it recovered quite nicely, and a little bit of an indecision going into today's session. So look out for a little bit more volatility this afternoon. And as we said, position squaring before the weekend could lead to a little bit of a dampening effect on any hopes that the indices have of rallying. 4-hour chart again on the Nasdaq, the real levels I'm watching here, just below around about the 13,000 level. We've got this head and shoulders formation playing out currently, so is potential for any sort of escalation, and we could see these markets getting slammed Sunday night, Monday morning. The head and shoulders formations played out in the S&P as far as the technical side looks. We've even got the really this level coming in at 4,220 would be significant, but really needs to get below the 4,100 level for us to really be concerned. The measured move target for the head and shoulders formation is around about 3,765, so quite a way off. Now take a look at the Forex side of things. Take a look at euro dollar. We had the recovery Tuesday, Wednesday, Thursday had the negative price action on the euro dollar, moved lower, and it's holding around about yesterday's price action or yesterday's close. Let's take a look at the 4-hour chart to try and get some levels out of it. Resistance coming in at 111.22. Support, we're just testing the support now at 109.75, just trading, trying to break back below it to get back into this these lows we saw earlier in the week. 108.05 is the support level. We can see the bullish momentum is stalling, reversing, looking at a crossover on the 4-hour chart. So a little bit of again, the bearish sentiment coming into that euro being really impacted by Russia, Ukraine. Sterling dollar, sterling giving up some gains as well over the last 12 hours. We can see we've broken from support. We've broken the supportive level at 130.80, and we're down below that. So quite a significant giving up of gains in. Let's take a look at the daily chart. Levels we haven't seen since November 2020 in sterling dollar. So quite a serious, obviously dollar, the flight to quality or the flight to sort of like safe haven continues. Here's this obviously predominantly it's euro dollar. About 60% of this basket is euro dollar, the dollar index. We can see the sort of like the positive move we've seen over the last couple of days. Finally, dollar yen. As we said, we've had these extreme highs. Let's take a look at the weekly chart. Going back all the way here, we saw this bullish flag. It looks like it's really playing out now. And we can go back to January 2017. That's the last time we saw these sort of levels. Support now should come in the form of 116.36, which was previous resistance. Potential for a double top pattern there has been negated, and prices have moved higher. So that's it. It's covering the markets. Let's dive into where we were on the gun to head yesterday. I think I failed miserably. What did I do, Joe? Joe's not here to sort of remind me of what I did. I bought the Nasdaq and it didn't really work out. Get the short-term chart up. This is the formation I was looking at. Looking at this inverse head and shoulders formation, it hasn't really played out, although it's potentially the right shoulder's just extended, so there is still potential for this. But I think with the markets being really sort of like impacted by Russia, Ukraine, I don't know if we're going to get any real focus on the upside, and maybe have to give up on this formation. We've just over the last hour, we've formed a shooting star candle, so that is potential for a little bit of a move lower. I always like to look at the potential in gold, and if anything, that feels like again could be potentially a head and shoulders formation, but really need to get a clear break of this neckline, which is all the way down at this low here, 1960 to 1970 really for me. That's where the support will come in. Until then, we could have formed a higher low, and markets might be projecting a bit further higher. So let's go with a little bit of got a gun to my head, and I've got to decide on what to trade. And I'm going to put my stop in at 1980, a little bit further than that, and maybe look to target a move back to 2040. So that's my gun to head trade idea. I'm looking to buy gold at current levels. Stop is at 1979.27, targeting 2039.27. Getting long here. That's my gun to head trade idea. So yeah, hope you understand exactly what we're trying to do in here, show you really how difficult it is to trade on a short-term basis as well, although our performance hasn't been really that bad over the last few years. It is really, it's more to do with trying to plan your trade idea and really think about the reasoning behind it, and sort of really managing expectations and maintaining discipline as well. So there's plenty of things to think about. So really, to finish off, we'll take a look at what we're seeing on as far as the markets are concerned today. Later on today, we've got 1:30 Canadian employment report. 3 o'clock, we've got the US University of Michigan consumer confidence. Next week's events, we've got US retail sales, US Federal Reserve policy decision. Also, Fed Chairman Powell press conference on March 16th, and on March 17th we've got the Australian employment report and the Bank of England policy decision. All things to look forward to next week. So plenty of volatility expected over the coming weeks. Be careful out there, and good luck with trading. Thanks very much.